if you have horrible books, you don't keep up with your numbers, your book of business is dirty, that's not something you generally can clean up in 6 months, let alone a year.
How do you document a culture? And I don't mean servicing, I mean growth.
Your job as the CEO is to run a profitable business. It is not to make everybody feel good. By the way, when you're running a profitable business, a great side effect is everybody feels good. All right, everybody, welcome to the Ridiculously Amazing Insurance Agent Podcast. We have some awesome people joining us today. We obviously have the APP team. You guys probably know Therese Potter, and then the wonderful Stephen Harrington Descotieux, because that's how I like to pronounce his name, so I remember how to spell it at the end of the day. But we also have two amazing people in the industry. So you are not just have one Kelly D on this podcast, you have two Kelly Ds. So Kelly Juilliard, do you want to introduce yourself? Tell everybody a little bit about your company, what you do.
Thank you. Yeah, I'm Kelly Juilliard, and I have a CPA and a CPCU. I spent around 15 years on the carrier and the reinsurance side, doing a lot of different things, specialty programs, working with distribution, of course, a lot of finance work. Got into the deal world in the last 15 plus years. I've been in the deal world doing M&A work for mostly agency distribution, but really all types of insurance businesses, primarily retail, but also some specialty and program work. So that's my background. I'm with INS Capital Group. We have a group of 8 professionals. We do agency valuations. We do buy-side consulting. We do sell-side representation. And also just a lot of perpetuation. And really, it may be 5 years down the road, 10 years down the road before the owner is planning on perpetuation, but we help them now so they have the type of value that they want when it is time to perpetuate. Thank you.
Awesome. And Kayla, would you like to do the honors of introducing yourself to everybody?
Absolutely. Well, thank you for having me back on the podcast. I'm an agency CFO, so we generally like to help agencies before they start talking to Kelly and talk value. And, the ones that are still in the day-to-day grind, most agencies under, I'll say 15 million, can't afford an actual CFO on staff. It never really makes sense for payroll. So that's really where we have fit in the industry. We only focus within insurance. So we're, as my background says, virtual, fractional, scalable, and customizable for agency owners. And we really focus on the true numbers and the core piece that, like what we say, is the heart of the business, so that you can meet all of your goals and, really be that third-party look.
So we have lots to talk about today because our podcast topic is how do we evaluate an insurance agency's performance? And I'm going to kick it off because I'm going to tell you how I think a lot of agencies do it. It's how they feel. Are we performing based on how we feel today? And we're big proponents here at APP, like we have to deal in facts, not feelings. So sometimes you could feel like the whole world is crumbling, but have your best sales month ever. Sometimes you could feel like they operate out of, and I know Kayla and I have talked about this, they look and say, what do I have in the bank account? And, just in talking about Kelly and Kayla, there's a lot of agencies that have some, off balances, either like payroll or they're overpaying producers or they overpaid for a book of business. And so kind of finding that sweet spots, we like to say like at APP, we're the leading indicators. Like, is your retention looking good? Is your staff, do you have the right staff? Like you can have high payroll and still have really low retention because you don't have the right people, you're overpaying them, right? Or you have untrained people, or your book of business is really not high quality. So you have to go ahead and overservice them to get things going. Or I'm sure both Kelly and Kayla have seen sometimes there's some sons and daughters on payroll that are making a whole boatload of money, but not necessarily adding the extreme value. Steven's about to spit out his orange juice. So, just to kind of pop it over, maybe, Kelly, looking at like the sales side, starting with the end in mind, right? What would you say are kind of like the 5 key drivers that make your agency worth more if you were to go sell it or perpetuate?
Yeah, great. So that's kind of a key thing. And it's also, I like your word choice of performing, because there's a lot of agencies that are operating and they're profitable, but they're not really performing.
Right.
And when we work with owners to sell their agency, or hopefully even a couple of years prior to that, I want them to get premium valuation. I want them to get like top shelf liquor. And some of the key things that we talk about with premium valuation is if you have any area of specialization, if you have a few niches that are even like 10% of your revenue, that can knock you up into a premium valuation.
Hmm.
If you've developed expertise in a niche, particularly over the last couple of years, because it's been tough, and a lot of agencies have developed expertise in ENS where they didn't even write ENS, but this ENS migration is not this. We're still in early days, people. You know, that developing some kind of niche is really important. A good balance of account concentration. When you have some jumbo accounts, we can work with that. And it doesn't necessarily detract from your overall valuation, but it will perhaps make a change in the terms. So there may be a heavier seller note or a heavier earnout component rather than cash at close. But really look at your accounts, make sure you're 2 deep the account. And if you're a bigger agency, 3 deep is lovely, but I realize maybe that's not realistic. So those are 2 really key things. We look at 17 different factors when we review valuation and position the agency for sale. And there's different weighting to those factors, but those are a couple that I really stress with my clients that they need to be working on.
Well, and Kelly, if I can ask a question too, because I've always heard too, if an agency has producers in an appropriate contract, not in a crazy contract where they like own 95% of their book and, you know, they make 107% commission and everything else, like, does that also impact the valuation? Because producers are hard to find, so you can sort of acquire a sales team.
Oh, absolutely. So people are priceless. And buyers, the niche expertise is in demand for especially the larger buyers, because if you've got some secret sauce or some expertise that you can help replicate in other locations, or perhaps the buyer can leverage that for their existing agency, that kind of thing. Yeah, that's a real value driver.
And my other question is, I've always heard too with the valuation, like if the agency can work without the owner, that's also drives up the value because the owner will be departing, you know, or stay on for a term through the transition. But
So what's been interesting is over the last 5 years, a couple of trends. Sellers are getting younger
Mhm.
because seller transition is longer. If you want premium valuation, again, I'm talking top shelf.
Yeah.
You need to be of a mindset to continue to not just work, but contribute as a leader for 5 years.
Mhm.
Get that premium valuation. Now, this varies with the type of agency. With a more straightforward personal lines agency, it's not as important. And there's definitely owners that are just so burned out and out of gas that they don't want to transition that long. And that's where it comes back to it's important to be 2 deep on every account.
Yeah.
And if you're an owner that's very hands-on with the clients, you need to be 2 deep. And then you need to also think about your transition time as a seller is ideally longer than it used to be.
And Kayla, how about what are you seeing like so from the day-to-day financials, right? Because you help prep up so someone like Kelly can value because the agencies put a lot in their financials, right? The car, the golf course, the the wife is, or somebody's on payroll that's not really doing some of the things, right? So what do you guys look like at agency CFO to say, hey, you're healthy right now?
Absolutely. And I'll say I think lately a lot of the conversations have been, what is the value of my agency? And that's when I generally say, have you met Kelly? But, at the end of the day, Kelly can only do her job, or whoever is valuing your agency, if the data's good. If you have horrible books, you don't keep up with your numbers, your book of business is dirty, that's not something you generally can clean up in 6 months, let alone a year, especially if we've got thousands of transactions that are really messy, right? How does Kelly know that this is a profitable niche? How do they even know that if there is a niche if it's not business data? So I think data integrity starts years before you're even having that conversation. And generally, owners are too late to the conversation to get that right and are scrambling to get that cleaned up. The other piece of that, and I love what you're saying, and what I've been explaining to owners recently is how you sell and who you sell to is so important to the conversation as well. Talking about that top shelf, do you want to perpetuate it internally? Do you want to sell to someone else? Thinking about what that end in mind, and why would you not set yourself up with the choice to stay on board? I have some owners that are ready to sell early. They've chosen to stay on board, have a retention clause in their policy, and they are still involved in the account transition, and it's been really successful. I have some that are so burnt out, like Kelly mentioned, and I can't see them going on for an extra 5 years and having to transition the account. So why would you not set yourself up to have that choice at the end, rather than not having a choice and being so deep into the account that unfortunately you're stuck there for 3 years because that's where you put yourself. So getting that cleaned up starts so early, and it's data integrity is number one.
Well, and I think all of us walk into agencies where the owner is completely burned out. The agency is running them, they're not running the agency. And they do tend to sell earlier, or maybe they bump into somebody like us and we're like, okay, you have no business infrastructure. We need to get some infrastructure, and you need to hold people accountable, and you need to get your processes in place. So, Stephen, maybe you could share to everybody, like, what do we look at APP? Because we're like, I feel like Kelly and Kayla get like the output of the things that we put into place, right? Like, so, you can become more profitable by the cleaning up the book of business. So we're sort of at the beginning, and Kelly and Kayla, I feel like, are, like a little bit down the pike. So Stephen, what are you looking at when you go into an agency?
When I go into an agency, I'm trying to get a feel for, are they using the systems they have consistently, or are some people using them, some aren't? Is everything going into the system? I was surprised actually just the other day talking with a client that's been a client for a while. And I was like, wow, you grew by 1.5 million. They're like, oh, we finally put that producer's excess into the system. And I'm like, what do you mean you just put 1.5 million in premium into the system? They're like, well, he just submits a spreadsheet every month that we pay his commission. And I'm like, no. How do we not know about this?
She's like, oh.
And then, then you're like, but then this way we've done it for 25 years. And I'm like, okay. Or in other places, it's like the staff is so overwhelmed, and we look and I'm like, we don't know why, because nobody's putting anything into the system. So let's get them logging in the tasks and activities to find out what they're doing, or find out where they're spending a lot of the time, they're spinning their wheels. And a lot of times it's like, it's mine, not let it go to where it needs to go so that everybody can have a great experience. So when we go into agencies, it's really looking at processes, procedures, the people, the overall of what's happening, and looking at the data to say, is this where you think you are? Because this is not what you're telling us you are.
Yeah, I love it when agencies pull up the carrier report. Well, this is my largest carrier. I'm like, okay.
But it's not in your system.
Sometimes you can ask for retention too. What's your retention rate? They pull up their line and they say, well, they're telling me it's 94.
So my favorite case is to go really high.
Yeah. It's
really high.
One thing where I feel like with agency performance partners and the work that you guys are doing, when I work with a seller, I work with an agency, I ask them about their growth culture. And how do you document a culture? And I don't mean servicing, I mean growth. And that's when I really appreciate when they have like specific processes, like you talked about, and training where it is to drive growth, not just service, but growth. And that will help you get a premium valuation.
Absolutely. And then, I think one of the things too, I'll ping Teresa on this too, is, maybe all of us come into an agency and you're, giving them advice, but we also have to think about how do you translate that down to the frontline staff, right? So whether we're talking about money or profit or like, does the CSR care about what the agency owner is going to sell the agency for? And I could say like should they? Sure. But I think, Therese, how can agencies help translate where they want to go down to the very frontline team member that maybe's been licensed for 2 years, that's, servicing accounts, because you need the whole agency's buy-in to get to where you want to be, right?
Absolutely. I think they basically need to make it easy, make it simple for those CSRs, because when you're at that level, you aren't paying attention to those high dollars and the money it's being sold for. They don't understand all those numbers. So what you need to provide for your CSR staff is security and confidence on you're selling it, and this is the benefit that you're going to have when I'm selling the agency. Like you're going to have more technology, or you're going to have more people with more knowledge that you can use to learn from, or they even have training when you're merging, or you're selling or buying. All you need your staff to know is the confidence to, what are the pros, what is it going to provide to your staff that is going to be a positive thing. A lot of them, when they hear that something is being bought or sold, their first thought is, are they going to fire me? Am I going to get laid off? And I got, one of them, the last one that I was with was bought by private equity, and I got laid off. It took them a year to do it, but they didn't tell me, or there was no suspicion that I was going to get laid off. It just happened. So the biggest fear is just losing their jobs. They want that stability. So once you can provide the stability and basically letting them know what the pros are of doing it, I think that's all they need. Sometimes I think, agents give incentives and bonuses to their staff, but they do it in a manner where the staff doesn't understand them. They don't make them simple enough for their staff to understand them. So it's times this and, minus this and plus this, and it just gets really confusing. So the more simple they can make it, the more positive. And, what is it going to do for me as a CSR? How am I going to grow in this new environment?
I think what you said rings out true. I've been in agencies before where the contingency checks are all in. They grab the piece of like notebook paper and they're like, what are we going to give everybody? And it's a very randomized amount, so I hear you. I think, for, just to kind of conclude so that you guys, our next podcast is going to be specific numbers to try to hit, like profit margins, revenue per staff, sales. But just for everybody to remember that, and I want to say this to the agency owners out there, like your job as the CEO is to run a profitable business. It is not to make everybody feel good. By the way, when you're running a profitable business, a great side effect is everybody feels good.
Mm-hmm.
But I see so often, and I know we've got a couple agencies right now that come to us, we look at the producer agreements. I'm like, you're not making any money off of this. You are losing money. They're like, well, but I'll make it up because the carriers and, I get to another tier. And I'm like, that's still a bad deal. Like you need to think through this a little bit. And I think sometimes people are so desperate for staff. I see a lot of overpaying for people as well, and that can impact some things. And I love what Kelly D said as well, because I like to say, like, when I first got into kind of the, insurance consulting side, people would always tell me I'm a service shop. Like, what does that mean? Well, we give excellent service. And I'd say, what do you do for service? We call people back. I'm like, okay, that's not like, so you're not doing like an NPS score. You don't have surveys. Your retention's not like 98%. Your book's not like average of like 2.5 policies per person. No. Then I go another, we're a sales shop. And I'm like, look at how much we sold. I'm like, great. What's your retention? They're like 83%. I'm like, awesome. So you're selling one to lose one. And some days you sell a little bit more. And I was like, why aren't we just growth shops? Like, why can't you do both really, really well? And I think that's what you two are both saying. Like, that's the sweet spot, is not to hyper focus on one, hyper focus on the other, but you have to do all of it really well. And I'm reading between the lines of what everybody's saying today too. It's also about having a good, strong business plan to say, there's a lot of agencies I think are just like in survival mode. Like, we grow by chance versus what's the intention? We always like to say, what do you want to be when you grow up? Like, do you want to be the $80 million agency? And we have some agencies that want to just stay as is, but like increase the quality of the business that they're writing. And that's what I love about this industry, is there's more than one way to do it, right? And I think Kelly D would also say there's probably no shortage of buyers either.
No.
There's just a vast amount of buyers.
Mhm.
But I will tell you, there's not too many, because as entrepreneurs, agency owners are incredibly creative. A lot of agencies have some little unique thing. And when you look at a fit from an appropriate buyer, you really got to match those up as far as whatever specific qualities of the seller, because buyers are different in what they're looking for. So, and it can be as simple as regional, but it also gets a lot more technical in terms of average account size, or it's endless. It's endless. So yeah, there are a lot of buyers out there, and we spend a lot of time really curating the potential buyer list rather than a shotgun to 50, because that's just a waste of time and not necessary. So, we spend a lot of time getting to know the buyers so we can really match as close as we can, at least initially, and then see how things play out, because they do vary quite a bit.
Yeah, absolutely. Well, I thank our special guests here today, and we'll be diving into some specific metrics to be looking at, like what is a good retention rate? What is a good revenue per team member? What is a good sales velocity, right? What is a good profit margin on our next podcast? So if you are interested, and also everyone, I just want to give a shout out. Like, if you're inspired, think about agency CFO. If you're like, I don't really know numbers. Like I say all the time, I don't have a degree in finances. Like Kayla does. So why recreate the wheel? And a lot of people, that's not their passion, right? And I'm just going to say, for Kelly D, I think every agency should have evaluation every 3 to 5 years. And a lot of them will give you the pain points you need to address. But we also have our agency assessment, which will come in. The biggest stop to both of these things is going to be your agency's culture too. And Kelly tapped upon that as a growth culture. But when you walk in and everybody's drained and burned out and crispy and not getting along, you aren't going to get very far very fast without addressing all that first. So, all right. Thank you, everybody. And we'll see you in our next podcast.